finished up the second trading session after the election. We have a lot to talk about, a lot of questions, and right next to me is the best guy to ask, Stephen Guilfoyle. Hello, Sarge. Thanks for joining me. It's getting quite dark out here at this time.
It's a pleasure, and thanks for that flattering intro. I appreciate it.
Oh, come on. How could I not? Well, things are very interesting here. We have people protesting Donald Trump on the streets, but everyone in there seems very happy. What's the dynamic?
Well, the markets are moving in the right way, and I guess in the very beginning when the futures sold off, I guess people were a little bit rattled. But at the very bottom on Tuesday night, it was pretty apparent that the market was oversold, and we started buying it back. It really hasn't stopped yet. It's at least for certain sectors. There are some sectors that aren't doing so well, but the sectors that would do well during this presidency, that we would think would do well, are indeed taking off. I'll go into a lot of detail if you want, but oh, yes, okay.
That's what we're here for, Sarge.
Okay. All right, well, the financials have taken off. The banks, consumer finance, capital markets. Now, why is that? Okay, because in a Donald Trump presidency, if he gets his policies through, and with a Republican Congress, there's a very good chance that he will, there's going to be a huge fiscal stimulus package probably. And there's going to be reduced taxes. Therefore, there'll be less income coming in. He's going to have to borrow more, which means there'll be more supply side in the Treasury market, which will make interest rates go higher. It'll also, with the fiscal stimulus, probably create jobs and inflation and wage improvements, which will be part of the inflation. And therefore, with those higher interest rates and this rate of growth, which we think we'll get at least 2 years of decent growth out of, you have a nice move in the financial sector. And not only that, but construction materials, building materials, the transports have been taking off, the railroads. There is an expectation here that there'll be growth for a couple of years.
What's Janet Yellen thinking right now?
You know, I don't think she's as nervous as you would think. I don't think he's going to ask for her resignation. He'll probably let her finish her term as Fed Chair, which expires in 2018. She is actually a Fed governor through 2024. I don't know if she would want to last around through to 2024. Usually when a Fed chair hits the end of the road as the top honcho, they don't go back to being a governor. So I think when she finishes her term as chair, then she'll disappear.
Well, something Donald Trump wants to get right to is trade agreement. Now, in just a few hours, we have the Asia markets kicking off. They did better than expected after the election. So what are we going to see?
Well, you know, I think as far as trade goes, he's not going to be as hard in that area as some people think. I don't think he's going to be as protectionist. He has good advisors. Just take a look at his economic crew. This is a top-notch crew. A lot stronger than Hillary's crew was, by the way. So in that respect, these advisors will, I won't go through them one by one, but these advisors will lead him when he probably doesn't have the expertise in a certain area. And I think it will, once again, be pro-growth, but he'll play, I can't say he'll play nice in the sandbox with everyone because he's a tough guy, but he'll play nice enough in the sandbox to get along.
Well, Trump on jobs, real quick, before you go, we have companies like HP, General Motors, a layoff expected in 2017. Is there going to be opportunity for those people? Are other companies going to be taking them up?
You know, this is going to be hard. Fixing this economy is not going to be easy. Even in the last GDP report that we saw for Q3, the growth was in exports. Personal consumption expenditures weren't good. Final sales to domestic purchases weren't good. Americans weren't buying the things that were being sold. We might have been selling, but we weren't buying. So although we have seen some mild improvement in some areas of this economy, we're a long way from home. So we have to see if this growth that we are expecting now actually materializes. And I do believe it will be there. I think we'll get a 3+, maybe a 4% GDP in the next year or two. But then there are really well-known economists who think I'm crazy and that we'll go into a recession. And we still may, because we're not really that far from a recession right now. So how quickly can he right the ship? He only gets into office on January 20th, and things won't happen lickety-split. This is going to be, we're going to have about a 6-month period here where there'll be some indecision and probably a lot more volatility inside the building here.
Well, Stephen, thank you so much for your insight. Glad to grab you at this time. And Sarge, happy Veterans Day tomorrow.
Oh, thank you. And today was the Marine Corps birthday, by the way, so we got a back-to-back.
There you go. Thank you, sir.
Thank you.